Perfect. Okay, so we're going to start. This will be recorded and I believe posted on our webpage. So if you miss anything, you can watch it again. There is a webinar chat open. You can ask questions. I'm going to try to answer them as we go. If not, there will be a Q&A period at the end of the presentation. Feel free to ask anything. I'll answer everything I can to the best of my ability. And you might even be able to unmute yourself if you want to and ask that question over the microphone or just type it and I'll get back to you. So today we're talking about financial literacy and budgeting. And my name is Peter Comisso. I'm an account manager here at NADF. I started over about 3 months ago. And just to give a little background about myself, I started my career working at a audit firm, PricewaterhouseCoopers. They're an international accounting firm. I got my CPA. I worked there for about 6 years total. I worked here in Canada and in New Zealand with that company. And then I wanted to try something different. So I quit and I went into forest firefighting. I worked dog sled tours in Whistler. I've worked on the rigs in Alberta. I've done cement and now I'm back in the office. So just to give you a little background about my experiences and how budgeting has helped me through those times, especially working my contract jobs, because there's been a lot of time off where I wasn't working for 1 or 2 months, and budgeting definitely helped me pay my bills and stay on top of things. So what we're going to talk about today is the emotions of money, and this is going to help you maybe change your relationship with money, how you view it, what you think about it, and it's going to help you maybe spark some questions next time you reach for your credit card, or you want to make some purchases. Then we're going to look at savings goals, what you should be looking at, maybe how to make them, how to create a budget. We're going to look at paying off debt and a little bit of investing. This is kind of just high level to get you thinking about it. I'm not an investing expert, but we'll surely talk about it. So the emotions of money. So when you first want to get into budgeting and looking at your goals, you want to ask yourself, what is your first money memory? Because this is going to maybe dictate how you spend, how you save, what you do with your money. So when you think of your first money memory, you want to ask yourself, like, how did it make you feel in that moment? Maybe afterwards, was it positive or negative emotions associated with that memory? I'll give you an example. One of maybe my earliest, I kind of have a bad memory, but I know when my family, we used to go on vacations, we were kids. Some restaurants would say, kids under 12 eat for free. I was probably 14 or 15 at some times that I would be eating for free, claiming that we were 12 just to save a few dollars. And I think that money memory translated into my adult years where I've become very frugal, or I won't purchase things unless they're on sale, which is still a good habit, but I might have not made some purchases or done some activities if there wasn't a discount. So that's kind of my first memory that I think about. I'm sure there's others, but this might help you think about your relationship with money when you start looking at them. So when you have that memory, then you want to say, how does your first money memory dictate your relationship with money now? So do you hoard money? Were your parents frugal? Did they spend a lot? Did they not have a budget? Did they not really put too much emphasis on money? Or were they super strict about it and that created anxiety around money? So this is going to help you determine, were these, like, the way I feel about money, is that what was projected onto me, or is this actually how I feel and how I want my relationship to be? Then you're going to ask yourself, how do you want to change your relationship with money? So do you want to start saving more? Do you want to see money as more abundant rather than a scarce resource? Or have you largely viewed money or people who have it as bad or evil? You might think, you think of greed maybe when you think of money. Unfortunately, money is an essential asset in our lifetime right now. We have to use it. No one can live without money for the most part. You do need it for things, or if you want to experience things, money is the exchange that everyone uses. So we have to use it. And then how are you going to make that change happen? So you're going to need a plan. And ways to do this is to invest your time into reading books, listening to podcasts, YouTube. There's tons of great material out there. I'm not going to, there's a few I follow or look at, but just talking about money, just learning, you might pick up one or two things here. I read a book and I got one piece of information out of there. I kind of had an idea of what I was doing while reading the book, but overall it helped me change my mindset and helped me budget better and enjoy spending more. And it was one vital thing, but from reading a 300-page book, it kind of changed my whole perspective. Um, you know, have conversations about money with your friends, with your family. I remember growing up, I don't think my parents really taught me budgeting or like really sat me down and talked about money. It was just kind of here and there through passing. But maybe sit down with your parents and ask what they do with their money, how they save. Do they have a retirement plan? Do they look just in their bank account to see if they have enough money, or do they have budgets set aside? And talk with your friends. What are they saving towards? Are they saving at all? Just create the conversation, because there's things they might do that you never heard of, or might spark interest, and then you can research that and go from there. Look at your credit card statement. I pretty much look at my bank maybe every other day, my bank account. I'm always on top of what expenses are, make sure there's nothing in there that popped out or that I overpaid, or any expenses that I'm not aware of. Even like my wife uses my credit card sometimes and I see random expenses. So I just have the conversation like, what was that spent? It's not that it's a bad thing. I just want to know what we're paying for. So then next, we're going to look at what will your life look like if you change your relationship with money. So what would it feel like every day not to be in debt anymore? What does it feel like to wake up every day knowing that your investments made money for you while you slept? What does it feel like to finally have enough money that you're covered for emergencies, or you're able to take a much needed vacation? How is your life different? What options open up to you now that you have a financial foundation? So these are some questions, either jot them down, but something to think about, and just get you thinking about money and maybe alleviate some of the stress you've been having. Because the more you learn, the more you educate yourself, the better you're going to feel. So moving on to, this is in relations to spending. So what is your current headspace or emotional state? So what I mean is, what are you making purchases to cope emotionally? So are you sad and you're buying something to maybe get that quick dopamine fix, or to buy food to make you happy? Are you purchasing something to bring instant joy, like just to feel good in that moment? And this is going to help you think like, is that purchase really necessary? I'm not saying don't buy food or don't buy those treats, but maybe think of when you're stressed out, you spend more, or you buy junk food when you're stressed out. Those are maybe unnecessary expenses you don't really need. How many taco dollars does it cost? So what you can do when you're spending is to compare your favorite thing to the item that you're about to buy, and then you'll discover how much it's worth to you and whether buying it is worth giving up something that you truly value. So let's say tacos cost $2 and you want to purchase something that costs $10. So you really like tacos, right? You love eating them and brings you joy. That's something you look forward to, like say maybe Taco Tuesday every week. So if I buy this $10 item, I'm not able to purchase five tacos. $10 if I buy two, that's five tacos. So is it worth buying that $10 thing and giving up your tacos that you enjoy so much, and maybe you don't really enjoy or need that $10 item? So that might help you maybe prevent yourself from spending on things that aren't necessary. Next is, are you accurately evaluating the worth of this purchase? So is the thing actually worth the price tag? So is the quality of this item worth what they're asking you to pay? Ask yourself that. Will I get a lot of value from this thing? Is it worth the money, or am I just buying it because it's on sale? So something might cost more. Say you're buying something of higher quality, it might cost more. but that might last you years longer. So you're getting more value, you're spending more, but you're getting more value. Or, if you buy something cheaper, it might last for a couple of months. Now you're buying it, you're maybe buying one or two of those things every year. So that cost in the long run actually can add up more than just buying that more expensive thing once. So try to focus on buying things maybe that are higher quality and that give you value. For example, I'm looking into buying a drum set, an electronic drum set. It's a couple $100s. It's kind of a big purchase, and I've been a little bit reluctant about it. But as my wife even pointed out, is how much joy and excitement and happiness is that going to bring you? So that's something I can play for years. That can last 20 years. Like it's meant to last, meant to be beaten on. That's going to bring a lot of value to me. So if I saved up my money, bought that thing instead of buying or going to takeout or going to the movies, if I focus my money on something that's actually going to bring me value, I'm going to feel better in the long run. Because if I just spend frivolously on junk food, going out, the movies, those might be happy in the moment, but if I buy my drums, that's something that's going to bring me value long term. And what you can do is you divide the cost of something by the number of times you'll use it. So if I'm drumming 2, 3 times a week over a year, you can divide the value of that or the cost of the drum set divided by how many times you're going to use it. And then it might make it seem not as daunting. Like it might be, say, $500, but if I'm going to use it 100 times in a year, it's going to be $10, more. Math is not that great on the spot, but 500 divided by 100, so that's $5 every use. So every time you're going to use that item, it's going to cost you $5, but it's going to bring you value over the entire year. So you can kind of think about something that way. Is your purchase, is this a habit or a routine? So for example, say you take a break from work every day. And in order to take a break, your excuse is, well, I'm going to go for a coffee. And maybe you don't actually like coffee, but you're only saying you're going on a coffee break so you can take the break. Or maybe the people you go with all go to the coffee shop. So now you feel obligated to buy coffee. So think about it. Is this just a habit that you're doing every day? That's the routine. I buy coffee every day. Is this actually something you want, or is it just an excuse to leave the office or leave work? Is it something you look forward to? Like these are the questions you got to be asking yourself when you're making these purchases. And another question or thing you can do, I kind of mentioned it, but is this worth X amount of hours worked? So you work hard for your money, getting paid hourly. So you want to say, if I'm going to purchase this item, is it worth all the hours I work to get it? So take the cost of the item divided by your hourly wage and see if you're willing to spend that kind of money. Is all the hard work you put in for one day, like I know, it might take a month's work to buy this item. Is it really worth that? Are you going to be okay with all that time that you're never going to get back just to get this item that you might use a couple of times? So when asking yourself these questions is just trying to get yourself in tune more with what you're spending on, why are you spending on it, what's important to you. So I'm not telling you to stop spending money. It's just stop spending the money on the stuff you don't care about. You want to make purchases that you're happy with. You want to make purchases that, items you're going to use continuously. And it's something that you want. You're not going to have, buyer's remorse after, or feel guilty that you made that purchase. You're going to feel happy about your purchases. And this is going to help you eliminate buying discretionary things that don't really bring value to your life. In order to, once you answer those questions, this is going to help you create your goals, your saving goals, what you want to do with your money. So these are 3 things that you're going to want to focus on when creating your goals. So you want to be very specific. So you want to have either dollar amount, what you're going to focus on, say paying down a source of debt. So you want to be specific. I want to save $1,000 this year. I want to save for a trip. I want to pay off all my credit card debt. I want to pay off my car loan. So you want to be very, very specific. And this is going to help you focus in on that goal and work towards it. Because if you're just throwing money around, saving randomly, maybe putting in an extra few dollars on your debt, it's not going to be calculated and consistent, and it's going to make it a lot harder to reach that goal. Timely. So you're going to add a time frame to this. So how many months or years? By what age? So I want to pay my debt by age 25, 30, 35. And then this is going to, again, help you work towards that goal. You can say, for example, you wanted to save $1,000. So you take $1,000 and I want to save it in a year. Well, divide that, say you're going to save every month. So there's 12 months in a year. Divide that $1,000 by 12 months. This is what I'm going to have to save each month to reach that goal. So now you have a clear vision of, okay, now I can focus on saving $100 a month instead of just coming to the end of the month, seeing what's in my bank account, and then chucking into the savings. This is going to help you excel. And then mission driven. So why are you setting this goal? What's your motivation? Why is it important to you? For example, you want a house. You want to get out of living with your parents or living in a rental situation that you're not happy about. So this is going to motivate you to save. You're gonna love putting away money. Like, again, don't deprive yourself of necessary purchases, but you're going to feel happy about saving. It's not going to feel like a daunting task. You're going to say, I'm this much closer to my goal. This is what's going to drive you. And with setting goals, you're 42% more likely to achieve your goal if you're writing it down. And another frame of mind is maybe set a ridiculous goal. So with your savings account, like $1,000 might be like, you might know kind of what your budget is, and you're like, okay, I could probably save $1,000 in a year. But let's set a ridiculous goal, like make it hard and say, I want to save $5,000 this year. So at the end of the year, you might not achieve that goal, but you will probably surpass that 1,000 because you're going to try that much harder to reach that 5,000 goal. So if you have a mediocre goal, it's not going to feel fun when you achieve it. You're not going to feel that motivated because it's easy. You're like, okay, I have $100 a month. I'll get there eventually. But if it's a hard goal, you're going to want to achieve it. And if you do, that's going to feel amazing. And if you don't achieve it, well, you probably have saved more than you probably would have if you had a lower goal. It's going to feel that much more satisfying. So these are, I've narrowed down 4 financial priorities just to make it easy on things you should focus on with your money. So one is an emergency fund. Then we want to pay off high interest debt. Then we want to invest for retirement, and then look at the big life stuff. So I'm just going to go into more depth here. So emergency fund, it's whatever you're comfortable with to begin with, but generally a rule of thumb is you want to save 3 to 6 months of your living expenses. So this is only what you absolutely need to survive. So this is going to be your rent, utilities, food, heating, like things to keep the light on, like shelter and food are kind of your main thing. Gas for the car to get to work, car payments. These are things that if, say, you lost your job or some event happened, you would be able to survive without any income coming in for 3 to 6 months. Then that should give you time to find a new job or find another source of income. Also, an emergency fund can be for obviously anything that pops up that you haven't planned for. Car breaks down, your pet gets sick and you have a vet bill. So the purpose of an emergency fund is to have cash readily available so you don't have to go in debt. You don't have to put it on your credit card. You don't have to access that personal line of credit or take out a loan. You have the funds there. So like I said, 3 to 6 months is generally what you want to look at, depending on how much you want to save or what you feel comfortable with, or maybe you have if something happened, your parents could support you, or you have a friend that could lend you money, if you ever lost your job. You can also save an emergency fund up to a certain amount, say like five or $10,000, and then anything above that, that can be your free spending money. But setting up an automatic transfer into your savings account will help with that emergency fund. Next, you want to pay off high interest debt because this is what's costing you money. So, what's considered high interest debt? So, generally, it's anything over 7%. And the reason they use 7% is on average, the stock market will generate returns of 7%, meaning you would be making interest income of 7% on any stocks or investments you made. So, any money that you're not using to pay off debt should be invested in stocks, but only if it's below 7%. Because if you're trying to invest in the stock market and you're not going to be making more than 7% on average, your debt's going to be costing you more. It's going to be accumulating than what you're making. So it's you're losing money in the long run. So you want to pay off your high interest debt, which is usually credit cards. They're usually around 20 to 25%. And this is what's going to cost you a lot of money. Then you want to look at investing for retirement. So depending where you work, you might have an employee benefit matching program, meaning your employer will take a certain percentage from your paycheck, usually up to 5% max, but depending on what your employer does, and then they will match it. So then they will contribute another 5% into a saving plan, what you choose, depending what your company does. But this is free money. So your company is matching whatever you contribute. This is free money. It's like, who doesn't want free money? So take full advantage of that. If you have employee benefit matching, max it out. Then also for investing for retirement, stocks is one of the main things, like mutual funds, bonds, ETFs. We'll kind of look at that a bit later. And then you can start looking at big life stuff. Do you want a house? Are you looking to get married? Do you want a destination wedding? Are you looking to buy a new car? Do you want to go on a trip? And this, I think when you look at it this way, you have a mapped out way of where your money's going to go. So this is going to help with your budget. You're going to save for your emergency fund first, then you're going to pay off your debt. Once you bring your debt down, any debt below 7, so it would make sense for me to start investing my money and not pay off the loan, like pay off the regular payments, but I mean, don't put like a lump sum to try to pay it down faster, because I can invest in the stock market and make more money with the money that I was going to use to pay down the car loan. The money that I'm going to invest in the stock market will make more than the benefit of me paying off my loan first. So how are we going to do this? How are we going to achieve our financial goals? How are we going to save? One of the easiest ways is to create a budget. So you're going to plan for where your money goes. And a personal budget is personal. Your budget's going to be different than the person next to you, than your spouse's. So you really gotta make it personal and think about what's going to benefit you. So you're creating a plan to spend your money. That allows you to determine in advance whether you're going to have enough money to do the things you need or would like to do. Budget is simply just balancing your expenses with your income. I looked online and there was a BMO, Bank of Montreal report that 60% of Canadians do not have a household budget. So if you create a budget after this webinar, you're going to be better off than 60% of Canadians. And like I said, you want to plan for how much you're going to spend and how much you're going to save. If you don't know how much you're making and how much you're spending, how can you save towards a goal? How can you efficiently save towards a goal? So you might think, why budget? I have money when expenses arise. Why do I need to create one? Well, it reduces financial stress. A budget helps create financial stability. So by tracking expenses and following a plan, a budget makes it easier to pay bills on time, build your emergency fund, and save for major expenses such as a car or home. Overall, the budget puts a person on a stronger financial footing for both day to day and long term. You feel in control of your finances. If you're stressed about money and it feels very scarce to you, ask yourself, like, have you made a budget? Would knowing how much I'm making, how much I'm spending, will help reduce that stress? Maybe it'll shed light onto expenses that you don't need that aren't necessary, or you'll figure out how much you actually are spending. It's going to help you work towards your long-term goals. So budget, what are your money goals? So it's going to help you map it out, maybe give you a time frame. It's going to keep track of your progress. It's going to make your dreams a reality. Looking at your budget, you might think it's actually going to not take me that long to save up the money I need to do that trip. By seeing what money you earn and what money you have going out through a budget, you can create a map for where you need to go or to get to your goal. It's going to keep you from overspending. So you're more likely to overspend, say if you're using a credit card, or you just see a balance in your bank account and you think you can afford that purchase right now, and you're not thinking of upcoming expenses. You'll know exactly how much money you earn, how much money you can afford to spend each month, and how much you need to save. You can schedule your payments a way to achieve this is by scheduling your payments. When you get paid, try to make all your bill payments on payday, because then this will show you how much money you have left to make your discretionary payments. It'll kind of help you from overspending, because you might see payday comes and your bills might not be due for a week or two. So you're like, oh, wow, I have $1,000 in the bank, but you have $600 worth of bill payments coming up that you didn't really think of. Making a budget is definitely going to help you prepare for emergencies. So you're going to create emergency fund, and you're going to help budget for it each week, and that's going to ensure you don't dip into other funds. You're not going to steer away from your long-term financial goals, and it's definitely going to help you to be more focused. With your emergency funds, you're going to want to consider putting that money in a high yield interest saving account. The only difference with a high yield interest saving account is you get a greater return than your traditional bank, which is usually 1%. And within Canada, I believe you can get up to 5% opening an account with, say, Coho. There's also, I think, EQ Bank and Duca, which is in Ontario, but I can touch on that a bit later. It can reveal your spending habits. So it forces you to take a close look at what you're spending on. So when reviewing your expenses, you may notice that you're spending money on things you don't need, maybe a subscription that you didn't realize you still have. It allows you to rethink your spending habits and refocus your financial goals. So how many people here today have actually looked at their credit card statement and went line by line, or looked at their checking account, and looked at all the accounts, and you can say, oh, I know what that was for, and actually address it. So it's going to help you pay down debt. You're going to focus in on paying down debt. You're going to know how much you can contribute each month, and you're not just going to waste dollars. You're going to contribute as much as you can to paying down debt. Buy something fun. I mean, budgeting can be fun. You can set up a budget of money each month or week, whatever, into something you want to buy. And this way, when you buy it, you're not going to feel guilty. We don't have buyer's remorse. And you're going to feel confident when you make that purchase, because you know you've budgeted the money. You're not going to dip into money was supposed to be for an emergency fund or pay your bills. And you don't want to miss bills, because then there might be late fees. So you're just going to end up costing more money. And then set spending limits. So this is going to help you be more in control of your money. You're going to know how much you can spend on a certain item. Like, I know for myself, I set a budget spending limit on takeout food. It's something that's easy to do. When you're tired after work, you don't want to cook. So I set a spending limit on it, and it's helped me spend less on takeout. And I feel better spending on it because I know I can purchase. I kind of worked it out to every weekend I can do one or two takeout meals, but I don't even have to think about it. I know I have a budget that allows me. I know kind of what I spend on that I can go out and spend on takeout, and I don't have to think about it. I think if I'm going to be able to pay my bills next week or something because I spent too much on takeout. So how are we going to budget? So things to consider, think about your financial goals, as we said, but think about your short term and long term. So short term might be paying off your credit card, reducing your weekly expenses, starting to build an emergency fund. Long term goals, paying off all your debt, and then saving for, a car, your quad, a sled, house trip, concert. Maybe there's a concert next year, and it might not be necessarily long term. I kind of chuck that in there, be more short term. But yeah, think of your goals and what do you need short term and long term. And this is gonna help you focus how much you should be saving, and then kind of narrow in how long things are gonna take. So when you're budgeting, you want to know where your money is going. You're going to track all your money, and it's going to help you figure out what comes in and what goes out. Every dollar you spend affects your overall budget. So I just give a quick example. You might have heard this a bunch of times, but say you spend $3 a coffee a day. So 365 days a year, that's going to cost you over $1,000 a year. Now, I'm not saying don't spend the money on coffee. Maybe you really like coffee. So that's something you can work into your budget. But if when we were talking about earlier, your spending going to be a habit or routine? Maybe you're just buying that coffee because your friends meet up at Tim Hortons every day, or you go for coffee break at work. Is that $3 something you want to spend on? Because if not, that's costing you $1,000 a year. That's something that could be the start of your emergency fund. That could be a trip, going to a concert. So just things to think about. You want to know what you're spending on and why you're spending it. When you're looking at your expenses, you're going to want to look at generally 3 to 6 months of your spending, looking at your credit card and banking statements. So the reason why is things are going to fluctuate each month. You might have more expenses in one month than the other. Keep track of your bills you pay. You might not pay bills every month. I know my water comes every 2 to 3 months. So if I don't budget for that in one month, I might not have enough money in the next month. So you want to create even if you might not pay that expense in that month, you might want to create a budget for it so you can save money for the next month to pay it. By looking at your expenses, you're going to want to divide them into two categories: your needs and your wants. So your needs, that's like I said, it's going to be your necessities. What's going to your food and shelter, transportation, maybe to get to work. So what do you need to survive? These are things you have to pay: your insurance, the minimum payments of debt, and even your loans. Then wants, that's obviously your discretionary spending. So these are things that that you want and you don't necessarily need. These are the fun things. And then this is going to help you look, what am I spending on? Am I spending on a majority of things I want? And maybe I'm missing the things I actually need. This is what you should focus on, because if your needs, this is your quality of life. Are you paying, is the heat going to stay on? Is your car going to run properly? Are you getting the oil changes you need to get to work? And this is going to help you again look at, what am I spending on? Where is my money going? These are the questions you got to ask yourself. And again, don't feel ashamed or bad. It doesn't matter what you spent on, but now you got to look at it and see, like, is it a necessary expense? Should I be spending this? I want to focus on things more that I need than I want. So basically, when you create a budget, these are the 6 steps. So you're going to gather your bank statements, 3 to 6 months, list your income, list your expenses, subtract them, and put your expenses from your income. That's going to let you know what you have left over. Then you can either send that to your savings in that. But then you're also going to want to track your transactions. So once you made your budget, you're going to want to track your transactions and see how you compare to your budget. So am I over or under my budget? Am I staying within, spending within my means? Then you're going to want to make a new budget before the month begins. So for the next month, there might be different expenses. This depends to what, how comfortable you feel with your expenses. Personally, I have a main budget that I made for main expenses and savings and investing in that. But I kind of have just my average for each month, and I kind of go from there. I do track my expenses and see what I spent each month and areas I maybe overspent and were not within my budget. But if you find that tedious and you don't want to make one new each month, make sure you have all your expenses in a budget. You can average them out for the month so it stays kind of consistent through the year. And you can put in um, little buffers to pay for unexpected things. So just going into a little more, I know I'm hammering in, but when you gather your bank statements, you're going to look at 3 to 6 months and you're going to see kind of what it fluctuates to each month. And then you're going to look at each expense and ask yourself this question: did it add value to my life? And you might not think about this when you spend, but yeah, think about those purchases and did it really bring value to my life? Is it something I want to keep spending on? And then you're going to focus on the areas of spending. Were they shocking? Were they not? Do you know how much you're spending each month? Did it seem like less or more than what you thought? Is there a pattern to your spending? Is it when you get your paycheck, all these expenses happen on that day? You go out to the restaurant, you go to the bar, or you go buy junk food or go to the movies because you have the money come in. So maybe you can focus on spending days. I set up these automatic payments so I can automatic payments or automatic withdrawals into my savings so I don't spend all that money on payday. Then you can see, like I said, are there any subscription or services that you're still paying for that you're not using? And yeah, are you spending more than you're making or less? So what happens to the leftover when you have leftover money? Are you transferring into a saving account? Are you putting it towards your goals? These are going to help you build a better budget. So after looking at the statements, you're going to figure out what needs to change and establish your values. So are you spending too much on groceries or a certain expense? Are your savings just sitting in a checking account not being used? And this would kind of be tied into the high yield interest savings account. And changing your values on spending, a method to practice is called values-based spending. So the idea is to choose categories where you want your non-essential, aka fun money. These are your wants, where you want that money to go. So usually you can pick up to 3 categories, and this is money that you can spend on your wants, and it's going to be values-based spending. So for for me, what brings value to me is takeout. Guys come home from work, or the wife's doing something, gotta go walk the dogs, you gotta clean the house, doing the chores. Takeout is value to me because it saves time. I'm super hungry and we need something then, there, now. Or if we're out on a walk with the boys, we went for, we're out an hour outside of town. We didn't bring a lunch, we didn't pack one. It takes time to pack a lunch. You got to bring a cooler, then you're going to carry it. So it brings value to my life. We can just quickly go over takeout. So that's one of the areas I want to include in my budget. So I know it's pretty boring, but this is essentially what a budget looks like. So it doesn't have to be, crazy or super big calculations or anything fancy. You can use Google. You can use pen and paper. I personally use Google. So yeah, you're just going to list your income, know what your total is, and expenses. So I know exactly how much I make each month and roughly on average how much I spend each month. Some months might be more than others, things do arise. But yeah, you list your income, list your expenses, total them, and then subtract them. This is how much is remaining. So now I know I have $415 remaining. What am I going to do with it? I'm going to chuck it into savings. I'm going to save for a gift. So in your budget, you can have line items, say, for example, holidays or birthdays. You want to save you can set a budget for yourself to say at Christmas, I want to spend $500 on gifts. So then you can take $500 divided by 12. I need to save this much each month. I want to go on a trip within a year. Again, how much money you think it's going to take, divided by how much time it's going to take or when that thing's going to happen, and then set that into your budget. So I'm not going on my trip right now, but if I save $50 a month, which might not seem that big, I'll have the money in 2 years to do that trip. And it's something you can build towards. It's tangible. You can see it. You can see that money growing in your account. And then I want to go to movies each month or whatever. I know it's kind of high, but just to give you an idea of what are you doing with the money remaining? Are you just letting it sit in your checking account, rolling over to next month, and now you think, oh wow, I have an extra $400 that I can spend on all this? Well, you might be missing out on your goals if you would have just put it in your savings or your accounts. And then, like I said, you want to track your expenses each month. So pull out your expense reports, look at what you spent that much credit card, and then track it against your budget and see, am I over or under? Maybe I need to adjust my budget. Maybe groceries, I said 400, but we actually spend 500. And then maybe looking at, are we spending on stuff we don't need? Are we buying more, or is that accurate? $500 is, the bare necessities. We're buying things on sales. We're not overspending. So it can take some time to work your budget out. Like I said, mine's still fluid. I work on mine from time to time, but it could take you 6 or 7 months to kind of get your budget down. And once you see all the expenses, over that time period, some things might pop up. You might need to include another line item here you didn't think about or didn't know. Like my property taxes come out 4 times a year. Well, there's a couple months that I'm not thinking about it, but that expense is going to come up. So that's something I should take here, divide by 12, and then each month I'm saving that. So when the time comes around, that money's right there. I don't have to worry about it. I don't have to pull out of my, line of credit or pull out cash against your credit card. And just different types of, if this is maybe too scary or too big for you, another type of budgeting is the 3 bucket budget. So essentially you want to look at your bare necessities. So these are the necessary expenses. It's the things you need in your life to live. You can't cut them out. If you lost your job, these are things like rent, mortgage, insurance, groceries, loan payments, utilities, bills. And then have another bucket for financial goals. So filling up your emergency fund, paying off debt more aggressively, investing for retirement or saving for the big life stuff. And then bucket 3, treat yourself. So you could say your income, once you look at your accounts, see what your income is. Say you have $1,000. Maybe I contribute $600 is going to be in bucket 1 for necessities. Bucket 2, I'm going to put $200 to that, and then $200 to treating myself. So that takes care of the full 1,000. But you can maybe open up multiple checking accounts or multiple savings accounts within your bank and allocate the money once you get your paycheck to each bucket. And now I know, okay, there's that much money in that bucket. I can put it towards that item. I can spend on that, or I can treat myself to eating out, vacations, new clothes, Spotify, plants, or coffee. So how are we going to stick to our budget? The easiest way is to write it down. And like I showed you, I had an Excel sheet, but so you can, if you get a Gmail account, get a Gmail email, easy to sign up. You have access to Google Sheets. So they, even like Microsoft Word, there's a bunch of other things in there, but I recommend getting a Gmail. It's free. You get access to Google Sheets and you can create a spreadsheet. If you don't like that method, there are apps you can get. Apps can be a little time intensive. They're very specific. You kind of have to fill in a lot of information, and kind of doing it on your phone might be hard. So, but definitely that's an easy way. They have tracking systems in there. They have some help. Most of them you do have to pay for to get the full benefit. That's why I don't use them personally. And then obviously there's always good old fashioned pen and paper. You can easily write that down each month. Um, and like I said, you have to update it each month. You have to look at what you're spending compared to your expenses. So we're going to have a budget party. So make it fun. Don't make it something that you dread. So you can schedule a time each week or each month. Pick a spot in your house that you're comfortable. Maybe make it a date night with your partner, and grab your favorite snack or drink. Maybe play a theme song. When the time comes, like set a time, and then get fun or get excited about it, and then see, am I getting closer to my goals? Are we saving more? Did we lower our expenses? Did we cut out all the unnecessary things? Did we purchase something that month that brought a lot of value to our life and that we're happy and proud of that we made? You're gonna write your goals down. Like I said, you're 42% more likely to achieve your goal if you write it down. And you want to be very specific, the time, amount, when you're going to do that thing. And this is even writing it down, you can create a vision board. That's something else, pictures, some short sayings, but hang it up in your house. And your goal is maybe go on a trip, put pictures of that trip there, an airplane or a car, and that's going to help you focus on it, think about it every day. And how am I going to save towards that goal? Am I going to work harder? Am I going to do a side hustle? How am I going to achieve that goal? Write it down. Another way to stick to your budget is to, if you use cash, to take it out, put it in an envelope. If you physically have that cash and you've spent it all, you can't go buy there. If you're at the store and you want to buy all these candy bars, but you only have $10 and the bill comes up to 15. Well, you got to put 2 or 3 of those candy bars back, and you can only spend 10 because you physically have the cash. Whereas I mentioned earlier, when you have a credit card, it's so easy just to tap here, pay for the purchase and not think about it because it's on credit. You have to pay that back at a later date. Another way to stick to it is automate. Cannot stress this enough, is to automate. This is going to help you pay your bills on time, avoid late fees, and this is also going to help you save easier. If on payday you set up a transfer from your checking to your savings account, 50, $100, whatever, it's kind of money that you can't touch. It's in the savings account. You don't need to worry about it. You're going to save that money. You don't have to do anything about it. It's gonna happen in your sleep. It happens automatically. This is gonna help you save better. This is gonna help you spend better, not miss bills and pay late fees. So I think automation is key. I use it for paying off bills, making the emergency fund. So it's definitely worth looking into it. Even for income, do you have direct deposit set up? Do you have to go to the bank and do it? Is it cumbersome? Look into setting up direct deposits, doing things electronically. So next, we're going to talk a little bit about debt. And people might be scared of their debt. They don't want to look at it. You don't open your bank account, see how much is in there, because you might feel like you're never going to become debt free. But there are some things you can do in order to focus on it. It just takes time and dedication, and consistency is key. So there's 2 methods you may have heard. These are 2 methods to pay off your debt. One is the avalanche method, and this is paying off your biggest debt first. So, your highest interest debt. So usually credit cards. So this is costing you the most. It has the highest interest rate on that debt. It's costing you the most. So you want to pay that off first, because once that's paid off, you'll have more money to pay off your lower interest rate debt. And it kind of creates an avalanche where it might take you longer and it's a bigger amount, but once you pay that off, it's just going to come crushing down. You'll wipe out the other debts super quick, because you'll have the money that wasn't going towards the big interest payment on that debt is now being directed towards your lower interest rate. Snowball method, this is paying off your smallest debt first, smallest interest rate, something that's attainable, maybe quick and small. And if you need to see progress quickly, this is going to help you pay off the small $500 or $1,000, and then you can see that, oh wow, I'm paying this off. I don't have that interest payment coming in. I don't have that debt bill reminder or the mail. And this is going to help you feel more motivated and get the wheels turning and create the habits of paying off debt. And then you can reach paying off the higher interest rate. Um, then you're gonna, like I said, pay off credit card debt is one thing you're gonna focus on because it's the highest interest first. Usually that's a rule of thumb. But again, if you want to look at the avalanche or snowball method, paying off your credit card high interest debt first would be the avalanche method. And in order to pay off your debt, you're gonna want to pay off the principal. So you might be making your minimum payments and you might be thinking, making the minimum payments, it'll eventually get paid off. That's good. But interest is going to keep accumulating on the balance of debt that's there each month. So if you're not paying above the minimum payment, you're not actually paying down the debt itself. You're just paying off the interest that's going to get charged to you next week. Depending on what type of debt you have, you might want to talk with the institution that loaned you that money and make sure if you are paying more money that it's going directly towards the principal. I've never had an issue or come into a scenario where what I was paying extra didn't go. Like I have a line of credit. If I pay more than the minimum, it automatically draws down my line of credit balance. But some loans might say if you paid extra money in 1 month, it might save that money and then just put it towards the interest the next month. So again, look at your contracts, what you have, what the interest is, what the terms are. Talk with your financial or like the bank. But yeah, you want to pay off the principal. That's how you're going to pay down your debt faster. Some ways to try to pay off your debt is balance transfers. So this kind of only really applies to credit cards. So you might transfer your debt to another credit card that has a lower interest rate. The credit card I have now, I have an option to transfer it to a lower interest rate, which is about half the interest rate. So that's going to save you money on interest. There's also 0% interest credit cards. There also might be loans as well with this, but there's say a welcome bonus. I had a credit card, there was zero interest for 12 months. So I transferred my debt to that credit card. I saved 12 months of interest payment and the debt just sat there. And then I'm able to pay it down. Or you might look into debt consolidation. You might have a bunch of different debts, all different interest rates, and it might be hard to focus on paying all of them at once. You might look into debt consolidation. You can talk with your bank about this. Essentially, they would give you a loan to pay down all that debt, and then you're just making one payment each month. This can be beneficial by being a lower interest rate. It's easier to focus on because it's just one debt instead of four or five, and you can save money. And it's easier to focus on and to see your debt coming down. So how are we going to pay off our debt? We're going to have an action plan. So you want to know your interest rates. Then you want to organize your debt first by the interest rate, then by the current balance. And then you can calculate how long it's going to take to pay off debt. If you Google a debt payoff calculator, I think I might have had that open. Give you an idea of which one I looked at. So you can put in all your debts, what balance you have, what your minimum payment is, what the interest rates, if you're going to make extra payments that month. And then this is going to tell you your payment schedule. So how much you should pay and how long it's going to take you to pay off that debt. So that's something to look at. Principal, you're paying that much in debt, depending on what you have, and then how much interest you're paying. So this is what you're paying on top of what you already owe. You can pay your debts off in 136 months, 11 years. I mean, that includes the mortgage, but this can help you visualize how long it's going to take you to pay off. I mean, you can put just one debt in there in the credit card, see what it's like. But again, debt payoff calculator, it's calculator.net. I just Googled debt payoff calculator. It was this one here. And yeah, knowing your interest rates. Have you looked at your statement? Do you know what your interest rates are? I've listed all mine out. I'm doing the avalanche method. I'm paying off my highest interest rate debt first, and then I'm going to build from there and pay off the lower rate and go down the line. So again, this is going to help you make your budget, know how much you have to pay each month, how long you're going to need to do that. And then they'll give you a goal. It might seem like a long time, but before you know it, you're going to be there in a couple of years or however long it takes. But it's creating a plan and knowing how much you're going to pay each month and sticking to it. So next, I'm just going to talk about saving a bit and kind of what savings vehicles you can use. If you haven't heard of any of these, I'm just going to briefly touch on them. So we have a tax-free savings account. You can open this when you're 18, and just like it sounds, you can invest or save in it tax-free. So when you put money in and it grows, either through investing in the stock market or you just have a savings account, you won't pay any interest, whether you contribute to it or withdraw it. So it's tax free. It started in 2009. And if you were 18 in 2009, the max contribution room right now, as I believe, is $95,000. I'm not, so that's $95,000 that you can invest in the stock market. And say your investment grows to $500,000, you would pay zero tax on that. So this should be something everyone has. Super easy to open up. You can open up through your bank. Just contact them. You can do it online. But this is where you're going to want to probably make most of your investments through, like, say, stock investments, because it's free. You can also open up tax-free accounts that have a higher interest rate, just like a normal savings account. You don't have to invest in the stock market. Registered retirement savings plan. So basically, you can invest through this plan. Like, you put money into the account, and then you would have to invest from there. So if you're in the stock market, I show on the next slide some platforms you can invest through. But the key thing is these are accounts. So like, think of your checking account. Well, TFSA would be like an account in your bank. So if I'm with CIBC, you would open it up, you would see tax-free savings account, and it would just be like transferring money in. But if you're gonna want to invest for retirement in that, don't just let it sit there, because usually TFSAs don't give high interest savings rates. You're going to want to invest that into the stock market. I've read stories where, for 20, 30 years, there was a woman, she saved for about 30 years for her retirement. She put in her contributions each month, and she's like, I'm putting in my TFSA, I'm saving for my retirement. When retirement came at 65, all she had was just her contributions. She didn't actually invest any of that money in the stock market or any investments, and she did not get the return she thought she was getting, and she didn't have enough money for retirement and ended up having to work longer. But yeah, your RSP, it's tax free now. So if you invest money into it, or contribute money into it, and then you invest it, you won't pay any tax on any of your gains. And also, any money you put into the RSP will be deducted from your taxable income. So if you make a lot of money and you're paying taxes, you want to look into opening one of these, because it will lower. So if you contribute $10,000 into your RSP in the year, it would lower your taxable income by $10,000. So you wouldn't be taxed on that when you file your income tax. But when you withdraw it, which is after retirement, you do pay taxes. There's 3 different methods. I'm not going to go into it, but it is something to think about. There's ways to utilize this. You should max out your TFSA first, because it's free, it's tax free. And then your RSP, you kind of want to look at what you're making, and then will this benefit me? This would take a little more education, or like research, or talking to a financial advisor. If you have kids, or even you can use this too, I think, as an adult, if you want to, for your spouse. It's a registered educational support plan. And you can contribute into here, and the government will match a certain amount. I'm not an expert in this, so I won't go too deep into it. But if you have children and you want to save post-secondary educational programs, it kind of works like a tax-free savings account, and the government does contribute money. So it is free money going into this account. So it is something to look into research. And I mentioned earlier, a high yield savings account. Um, it's basically short-term savings offering higher returns than traditional savings account. So traditional savings accounts offer maybe from 0.3 to 1%, which isn't much. But high yield, you can get up to maybe 6%. So there are a bunch of banks out there, like bank accounts that offer high yield interest savings. Like for example, Tangerine, they offer a promotional rate of 6% for like 6 months, something like that. So you can take advantage of opening it. They do, I know I used the promotional rate for 6 months at 6%. Then it went back down to say 1%. But then I just recently got an email. They're offering me 5.1% for 6 months. I think I've had that account for 2 years. So just type in high yield savings account into Google and you'll get a list of them. I do believe I have an Excel sheet listing all the different high yield savings accounts, the percentage, whether it's a promotional offer or it's year round. Um, this is something, if you're interested, I can um, email you. Um, Investing, Wealthsimple and Questrade, these are online investment management services. You might want to look into investing into the stock market. You can set up automatic deposits into these accounts and then invest through the stock market in here. And investing, I just trying to wrap up quick here. But so two things I want to highlight. One thing is ETFs. These are exchange traded funds. So these are funds you can buy through Wealthsimple or Questrade. And it's like buying a stock. But this ETF can track anything from a price of a commodity to a large and diverse collection of securities. So for example, you can buy an ETF that tracks the S&P 500. The S&P 500 is an index fund that tracks the 500 most profitable or biggest companies in the States. So just to give you, trying to give you an idea here about investing and the benefits of it. So the index has returned a historic annualized average return of around 10.26% since 1957 of its inception until 2023. So just to give you an idea, if because investing is something you want to do over time. It's not you might getting rich quick. There's no get rich quick schemes, but if you invested $500 a month, you had an average return of 10.26, which is the average return of the S&P 500 for 30 years. You would have contributed $180,000, but you would have made over $900,000 in interest. So you're going to have $1 million in 30 years. So if you want to retire, you could have $1 million investing in the stock market. And you can invest in something like ETFs, which are easier to manage and to look at. And you might only need to invest in 2 or 3. But again, do research, talk to your financial advisor. These are things I'm happy to go into more if you want to contact me. But yeah, sorry, I'm looking at the time now. That is the end of my presentation. If you have any questions, you can ask them now, or you can email me. This is my personal email here. This is our general email. If you have any questions, or maybe you have any business ideas you want to talk about, you're looking for funding, you can email that. This is our website. This is our Thunder Bay local number here, and we are located in Fort William First Nation, just outside of Thunder Bay. If there's any questions, I'll try to take them now. I just quickly, I do have a couple budgets, spreadsheets. If you're interested, you can email me and I can email you them. We might be looking at posting them on the website. But for example, like January, this is the month. These are all my expenses, totaling them, groceries. And then this is going to help me see what I'm spending each month, what my income is. And then creating my budget. This is going to help me, once I record my expenses, I can create an average of what I'm spending on and like, okay, this is kind of what my budget is and get an idea. I also have an expense tracker. This is all just kind of fancy, but there's some bar graphs, pie charts, but you can create different buckets and see what you're spending on. Also look at an income dashboard. How much money am I bringing in? Write down all your income. If you're interested, again, might be doing a webinar on how to do these Excel sheets specifically. But then you can look at, yeah, tracking your debt, paying it down. How much have I paid off? If I pay off another $1,000, now I paid off 80% of my debt. You can track that, and then create your budget from there. Okay, and yeah, like I said, any questions, feel free to reach out, and I can try to help you. And just remember, the point of budgeting isn't to have more money; it's about being happier with the money you have. So thank you for listening to my presentation today. I hope you got something out of it, or maybe just something to Google and look at it. But yeah, do research, Google, like YouTube, go on TikTok. Anything you learn is gonna help you. There doesn't seem to be any questions. I'll leave the video on for a bit. I'm just going to close the video on my microphone, but I'll leave it on for another 5 or 10 minutes. And if anyone has any questions, let me know. Thank you. Okay, it seems there's no questions coming in. So thank you all for joining today. I hope you have a wonderful day and enjoy the sunshine. Thank you.